Thanks a lot, Indu ma'am, first of all, for inviting me here in prestigious institution where I owe a lot because I have done 2 courses from this institution. One is my engineering in IT. I was a student from University Institute of Engineering and Technology, 2012 pass out, and then I am also a student of University Business School, Punjab University, from where I did my MBA. Right, so I owe 2 degrees to this institution. So always committed to come back and share some of my experiences from the industry. Right, maybe I'll start with from where Sri Vidya Gill ma'am right touched upon. I just want to double click this J curve a bit more. Right. Uh, so we talk about lot of industries, right? Ma'am gave examples from consumer industries, right? From IT services industries, right? But talking specifically about pharma, right? In pharma, this J curve is even having a higher dip, right? Because the kind of capital we need and the time it takes for a drug to get commercialized is very long. I hope you agree, right? So if we talk about the value chain of pharma industry, right, we start right from the discovery of the drug, right? Then there are preclinical trials, then we have post-clinical data, right? Then somewhere comes the manufacturing stuff, right? Before that there are regulatory approvals you need to seek, right? And then the manufacturing stuff is there. Then also you need to do a lot of safety, right? We call it as pharmacovigilance, right? A lot of safety is required. There are regulatory requirements that you need to document each and every adverse impact of your drug, right? And then there is marketing and stuff, right? So the value chain is huge, is very long and very complex, I would say, right? And this J curve is very steep in the beginning and quite long as well till you become profitable, right, for a single product. So to this group my message is also look at the value chain, right? Try to figure out where your passion lies, right? What are your core capabilities? What problem can you solve? It's not necessary that you need to launch a drug and manufacture it and sell it. No. So ma'am talked about a lot of business models and you can pick up one niche for yourself. You can work at the drug discovery level. So I will talk about some of the examples who are just focusing on drug discovery and they are a unicorn today. Okay, what is a unicorn? It's a finance term.
More than certain billion.
Correct. So if an organization reaches a $1 billion of valuation, we call it as a unicorn. So how much time it used to take an organization to reach a unicorn status earlier? Let's say 20 years back, how much time it used to take? Any guesses? Sorry? No. Minimum 20 to 25 years it used to take, right? Because the organizations were primarily focused on your manufacturing.
Term तब 1 billion ही थी.
No, term was different.
unicorn के लिए,
It was not, I think, it was not invented. But these days we are, because of the startup culture, right? So now unicorn is very common term which is used, right? And everyone when we start our business, right, we always want that somehow we achieve a unicorn status, right? So the time now startups are taking to reach unicorn status is how much? A successful startup. Correct, 5 to 6 years. If you are very focused, if you are going the right way, right, using the right partners, you can achieve unicorn status within 5 to 6 years. Let's say you have a startup valued $1 billion and you have a stake of, let's say, 70%. How much you own? $700 million, right? So today the message is that we not only earn from the net profits, the founders are not looking at net profits, that is the profit after giving to the taxes and to the debtors, the main motivation is the valuation. Because when you raise funding, right, what do you necessarily do, right? You sell some of your stake, right? So let's say you sell some of your stake and you get money, right? So valuation is the main source of funding, or main source of, you can say, capital gain for a founder today. It's no more, I would say, net profits. The game plan has changed tremendously. It has changed. Okay. So again, touching upon this, right? So in the pharma industry, the importance of investors become even critical, because this J curve is very steep from here and it is very long till here, and this period we call it as capital burning, right? This is a time when you need to burn the capital till you reach a break even point, and then you start at least making some positive cash flows, right? And then somewhere you will earn some net profits, right? I hope this is clear. Okay. Now coming to, let's talk very basics about like valuation, right? I'll not teach valuation, don't worry. Uh, the objective is not to teach valuation, but to give you a basic idea, right? And also discuss, so that we can discuss, right, how to drive your valuation, and we will also discuss how to sustain your valuation. Both are very critical, right? So if we talk about valuation in a very crude language, given we are not finance students, so it is some metric. It can be a financial metric, it can be revenue, it can be EBITDA, it can be free cash flows, or it can be an intangible metric, the value of an intangible metric, I mean to say. It can be a patent, it can be an IP, it can be a regulatory approval multiplied by some multiplier, which is typically your EBITDA multiple, your revenue multiple, right? It is market driven, right? So typically speaking, that what are investors paying to startups who look similar to you, at a similar stage to you, right? That multiplier will come. But basis what Suvira Gill ma'am was teaching, right, your business model and a number of other factors we will just discuss, you can achieve higher multiplier for your startup, right? Because you can do much with metric, right? But so beyond a point you cannot do much about it, right? Because you are a startup, so you typically will be pre-revenue startup. You will not have a revenue for sure. You will have intangible assets, you will have a team, you may have some research, some ideas, you may have at the best some IPs or a patent, right? So that metric is relatively small for a startup, right? Because it will be intangible. So yes, investors will put some value to it, but question comes, what multiplier can we achieve, right? And what are some of those factors which typically investors look into your business, right, into your business model, into your business plan, and then they decide the multiplier. And there are a lot of negotiations which happen, right? Because you will say, okay, I want to raise this much of funding at this particular valuation. Investor will say, hey, nothing doing, your multiplier should be X and not Y because of ABC reasons. And then you negotiate, we call it as term sheet, and it's a very hardcore negotiation which we do, right? But very interesting, right? Okay, so how do the enterprise value differs in case of startups versus the listed firms, right? So listed firm, talk about any of these, right? So you always know their valuation, right? Because it is listed in the market, so you know what is their valuation, right? But in case of startups, the very critical factor is that you do not know the valuation of a startup every single day. They are valued at each round of fundraising, correct? So that is a,
Can I ask a question, sir?
yeah, please.
WhatsApp, it was a startup, right?
Mhm.
WhatsApp. And then it was acquired by Facebook.
Correct.
So how would you, I mean, if you take that as an example, how would they have valued it, and when they acquired at a certain cost? So that
So is how I relate to it, right? So there are two ways to get valuations, right? One, you create value for others. Two, you become threat for others. So this is the second case. WhatsApp was a big threat to Facebook, right? And I think they paid $22 billion of valuation to buy WhatsApp, if I am correct. It was around $22 billion of valuation, right? So imagine no revenues, only user base, but threat to a large organization makes you very rich, right? So that in that case, ma'am, what we typically do is we look at the customer base, right, and we look at what are the different avenues, right, what all you can do using that customer base, because WhatsApp was coming up with so many other things which Facebook was also doing. So it was a threat to Facebook that it will take up their customer bases, right, and they will also come up with other services. WhatsApp is also coming into the payment stuff now, right? They are coming into sharing the pictures and everything, right, which Facebook was typically doing. So it was a big threat to Facebook. That's why they thought we should acquire it before it becomes too big to challenge. All right, so that's what it works. Okay, anyone else? Are we good till now? Let's be active here. Are we good till now? Okay, good. Then second is the metric and the multiplier, right? It will change. The metric will change. For example, when you are pre-revenue, it will be your intangible asset, right? When you are commercialized and you are able to sell the product, your revenue will become the metric, right? And then there will be a multiplier associated with it. And then as you mature, right, you have free cash flows, then free cash flows and the net present values will be your metric, right? And then there will be a multiplier. So for us as entrepreneurs, I would say it is very critical to have basic acumen of fundraising. I'm not saying knowledge, I'm using the word acumen. Acumen is understanding, right, how it works, right, and at each valuation, at each fundraising round, the valuation increases or decreases. And typically speaking, can you tell what is the timeline of a fundraising round in these days? And we'll see in some examples as well. What is the typical timeline now? No answers?
Sufficient fund raise करने के लिए कितना
No,
time
no,
लगेगा?
no, no, no. So like I raise funding today. When will I raise the next round of funding?
शुरू में तो बहुत जल्दी चाहिए होगा.
Correct. So now startups are raising every year, almost every year, right, from a different set of investors. So with every stage, your metric will change, your multiplier will change, your investors will change. So fundraising has become a full-time job in startups because it is very, very critical function, right? Raising funding, right, you need to have the right narrative, it is all about storytelling. It is all about storytelling, believe me or not, right? If you are not a good storyteller, you cannot raise funding at the right valuation. It is all about negotiation, and it is also about timing. We will discuss few examples, right, who couldn't time their fundraising rounds well, and they faced decline, 90% decline in their valuation from one round to the next round, right? So very, very interesting topic. This slide and this all discussion was to get some interest in all of us, right, that we can do wonders, right, but we need to learn the game, right, and understand the rules, right. So okay, let's move ahead. If we are at a pre-seed stage, right, then the matrix would be your intangibles. We already talked about it, your intellectual properties, your patents, right, your prototypes. It can be your leadership team as well, right. Leadership team is very, very critical aspect, right. What are your credentials, right, what is your experience, what all you have done in this particular industry is very critical. So there are various valuation techniques which we typically use, right. So as I was talking about, we assign value to those intangibles. It's known as Burkus method. There is a scorecard method, right, which adjusts your valuation, it compares it to similar startups and then adjusts that okay, you have a better IP, right, or you don't have a better IP, it will adjust, right. And then there is a risk factor summation method as well, right, which values you basis certain risk factors, right. There is a risk of like clinical risk can be there, regulatory risk there can be there can be technical risks, right. So many risks are there. Typically speaking, compared to any other business, any other industry, pharma is the industry with highest risk, right. You can fail at any level, right. But it has got some benefits as well. I'll talk about in the next slide. When it comes to the seed stage, right, we call it as a seed stage when you have some lab data. So also recognize that what is the right stage, right, where we are. So for example, most of you when you are at an idea stage, we call it as a pre-seed, right. You are yet to do some experiments, right, that yet to get some lab data, right. In that case, your primary supporters are your incubators, right, like this kind of a program, right. We are helping you to take your ideas, right, coach you, guide you, mentor you. Typically speaking, incubators will not provide much of a funding, but they will guide you, right. They'll provide the guidance. Government grants are there, and there are some angel investors who are investing at very early stage, right. When you get some lab data, right, and you have some preclinical results with you, you qualify for a seed stage of funding, right. And typically speaking, in this case, right, if we talk about unlevered free cash flows, right, I don't want to confuse anyone, right. Unlevered free cash flows are very, very simple. They are the cash flows which remain with you after paying for all your costs, operational costs, right, paying the tax and paying for the change in the working capital and paying for the capital expenditure, whatever you invested. If you are able to sustain after that, that is known as free cash flows typically, right. So basis that, if we do net present value, right, which is the discounted cash flow method, which is most popular in the industry, right, which works very well for consumer products, which works very well for IT services industry, it doesn't work for pharma industry. Right. So it is not a recommended method, not to be used, right, not to be used. So we should know what not to do first and then learn what to do, right. So we will not use risk adjusted NPV, rather what we use is real options valuation, right. Why real options valuation? In the last slide we said pharma industry is one of the most riskiest industry, right, with lot of risk at each stage, but there are benefits of it as well, right. So there are models, right, by which you can have flexibility at each stage, right. So maybe you have an option to delay. If you are not getting the right results, you can delay your process, right, and you can pause it off, right. You'll need less funding, right. Then you can have an option to expand. Okay, if you got good results very quickly, you can expand very quickly, you can commercialize it, right. You have option to abandon. If the drug is not effective, you can abandon it, right. But this typically is not the case with the other industries, right. So in pharma, typically we use real options valuations. And then last is the venture capital method. It is typically like venture capitalists will say, right, I need 30% return on this, right. What will be the post money valuation? Basis that we compute the pre money valuation, and this is what we can give you, right. So you don't need to get into this, right. You can get this on internet. I'm not teaching you valuation, right, but I'm trying to discuss some of the fundraising acumen to you, right. So a basic sense of it, that what is the right timing, what is the right stage, right, how to go about it. In this case, we typically raise funding from the family offices and the venture capitalists, right. Then the growth stage is there, right. Once you have the clinical data, you have some early revenue as well, right. You are able to license your drugs, right. So you can get the loyalty fee from the pharmaceutical companies. Then you call okay that you are at a growth stage. Wonderful, right, because you are getting revenues, you can forecast your cash flows. Now we are at the right stage to use the discounted cash flow method, correct. Before that, discounted cash flow method doesn't make any sense. Here we also use comparable transaction method, which means we typically compare that okay, if similar deals are happening in India, right, for similar kind of startup, right, what are the multiple they are getting, that multiplier I am talking about. That multiplier multiplied by your revenue is your valuation. Typically revenue multiplier is 3x, EBITDA multiplier is 6x, but it can vary again basis a number of factors, your revenue model, your business plan, your team, your patents, right, each and everything, right.
Sorry, I missed. EBITDA क्या होता है?
Earning before interest, taxes, depreciation and amortization. Apologies for using an abbreviation. EBITDA is a very typical term we use. It means your earning before paying for the interest, taxes. Interest means interest to the debtors, taxes, and the depreciation and amortization, because depreciation amortization is your non-cash expense. So operating income is EBIT, right, earning before interest and tax. To compute EBITDA, we add back the depreciation and amortization to get it.
So the actual revenue which you earn as a startup would be much lesser than the EBITDA because you are going to pay your taxes and your debtors and
Tax will come when you are profitable.
हाँ,
Tax तो होना ही नहीं है,
ठीक है.
right? So you don't need to worry about tax. Typically speaking, if you have revenues, right, you are already incurring the cost, right? If you are able to sell, then only you will have cost of goods sold. Alright, typically speaking, we use EBITDA multiple. Sometimes if EBITDA is negative, then we use revenue multiples. That's how it works.
तो जो वेंचर कैपिटलिस्ट्स हैं जिसने इन्वेस्ट किया हमारे पास, तो उसके पास भी हम कुछ पीरियड लेते हैं कि उसके बाद हम डेट्स पे करने शुरू करेंगे कि पहले दिन से we start paying
नहीं,
back
it depends on your term sheet. So like let's say I raise 5 million from a venture capitalist, right? Now there are two options, whether you want to get into equity or you want to get into the debt mode. ठीक है, equity में it is clear that you don't need to pay back anything, you need to sell your stake, essentially speaking. So let's say if your valuation today is 100 million and you are raising 5 million, 5 million is 5% of 100 million, correct? So you are selling 5% of your stake to the venture capitalist. Typically speaking, in early stages, we try to avoid the equity path, but it is a double-edged sword, because if you dilute your equity, and typically speaking at an early stage you will not have 100 million of valuation because you have no revenue, right? Your valuation will be very low. If your valuation is low and even if you are raising a small amount of money, you will be diluting your equity a lot. As a founder, I do not want to dilute my equity, correct? Is it clear? Yes, no? Okay.
तो उस केस में फिर डेट मोड में शुरू वाले वेंचर जो कैपिटलिस्ट
Coming to that, ma'am. So debt may, if no worries. If we come to the debt part, right? So debt may, again there are various options, right? So one debt is a bond, right, wherein you are paying annual interest, as you said. That will start from the first year, and then after 5 years, let's say after 10 years, whatever you decide, it will mature. That is, after 5 years, you need to pay back the principal amount as well. Let's say I raised 5 billion of bonds, right, and it is having 5% or 6%, let's say, interest rate. Every year I need to pay that interest expenses, then interest will be there.
suppose you go broke before that, you fail,
हाँ
startups are bound to fail.
हाँ
तो
हाँ,
उस केस में फिर क्या होता है?
it will be issue. It will obviously nobody will give you debt without putting anything on what we say, paper. So they will sell that and then they will recover that.
Okay, so जो भी उसमें valuation होगा उसके
Correct,
बदलाव
correct,
में
correct.
startup
Or they will restructure that debt, right? So this is how it works. But typically speaking, we do not raise pure debt in startups. What we do is we raise convertible debt or preferred bonds or preferred stock. By convertible debt, I mean so you don't need to pay the interest, right? So your interest will accumulate to your principal amount. 5 million may 5% of 5 million will keep on adding up. At the end of the 5 year, your 5 million will become, let's say, 6 or 7 million, 6 million, let's say, right? 6 million is the value of that debt now with the investor. Now investor will have an option whether they want to continue with the debt, they want to get the money back, or they can convert them into equity. So they will get the equity equivalent to 6 million of the capital. Then again,
जो भी valuation है.
then again your per unit capital will be valued, that what is the valuation of your one share, right, and then basis that the investor will get the equity share. That's how it typically works. हाँ जी.
And I'm going down to the very ground level.
हाँ, no worries.
Let's say a student passes out and he wants to just like start a gala, एक gala लिया,
Sorry?
tablet,
Tablet.
small shed लिया, समझो, okay, जिसमें tablet manufacture कर रहा है, वो he is making for somebody else.
मैन्युफैक्चर कर रहा है, ओके.
हाँ.
ठीक है.
He doesn't have wants and वो दूर की बात है. I mean he wants some money, let's say 10 lakh rupees, just to buy a machine, tablet machine and basics. Air conditioning unit, he will need only 10 by 10 का room है. I'm just giving you arbitrary.
ठीक है, ठीक है.
So how does that person, what does he do? Like from where he gets that? I mean 10 lakh I just put a minimum जो machine के लिए वगैरह करता है. I mean that's too less, I know, but just if you can tell from where is he,
So that's what we were talking, ma'am. Your angel investors are also there, right? So they typically invest in the very early stage startups. So they will discuss with you what is your idea, whether it is scalable. So I'll discuss that as well, right? So what are those? हाँ. नहीं, where to find तो इसी में ही है कि typically angel investors are there, grants are there. So there are various government schemes.
इतने amount के लिए he will have to look for government grants.
Government grants are there.
Bank loans.
No, bank loan अलग हो गया. Bank loan you'll have to put. हाँ हाँ हाँ. Government grants में there is a organization as well, I think Bicon या क्या, there is a name as well, right? हाँ, BIREC, right? So BIREC is a Indian organization, government organization which provides grants. So they do. Only challenge is it is a bit longish process and you have to do a lot of applications and convince them, right? So it's like that. तो उस तरीके से, right? But long story short is you should have the idea, you should be able to communicate the story. Again, storytelling is very, very critical. Anyone else? I see a lot of people laughing. All good? Okay. It is good to laugh, no problem, right? So if you have any questions, feel free. Feel free to ask, right? Yeah.
So where do they bring the funds from? They won't talk about millions, but they'll be right.
No, that's why I wanted to have, I was discussing with ma'am as well, right? I want to have more of an interactive session, right?
At the last moment he prepared some slides.
This is just for reference, right? I just want more interactive session.
Questions that come to your mind. So whatever we are asking is only we are.
If you have identified an idea, right?
Definitely मतलब ये सोचना पड़ेगा अगर कुछ भी सोचते हो वेंचर करने का तो यही सब बेसिक चीजें हैं जो सोचनी पड़ेगी.
Any questions? It can be as simple as anything. If you want to discuss.
No. एक स्टार्टअप में क्या एक बंदा शुरू कर सकता है कितनी मिनिमम टीम की बिकॉज यू सेड फंड रेजिंग टीम शुड बी वेरी इंपॉर्टेंट तो मतलब शुरू में कैन दे हैव अ स्मॉल टीम एक दो तीन लोगों के साथ भी चल सकता है कैसे करना चाहिए.
So ma'am, the way we do consulting, right, is that typically let's say you are an entrepreneur, right, and basis my experience, right, entrepreneurship is not about doing everything yourself. Very critical. You cannot become an entrepreneur if you think you will do everything yourself. You will have to delegate, you will have to project manage it. By program managing, I mean you understand your industry, you understand your value chain, you identified one niche, कि ठीक है, I'll do this. I'm best at it, I have the right resources, maybe I do not know, I know somebody, I'll partner with them. आपने partner कर लिया. So you build up a team. Let's say we can take one example. For example, let's say I want to launch a drug. I discovered a drug. Okay. My idea was about a drug. I discovered it. Let's assume we got the clinical trial done. Okay. Talking about pharma, right? That everyone will understand. So we have identified a drug. Now the next step is clinical trials, right? Getting the regulatory approvals, right? That step is required. So I'll partner with a educational institution like university, like this Punjab University. I'll request them कि ठीक है ma'am, I'm your student. Please do something for me, right? I'll do a lecture, right? And please help me, right? So ma'am will help me, right? And I'll get those trials done. ठीक है, at a very maybe very minimal cost, right? So that's what the power of partnership comes, right? Then you will maybe you look for some freelancer, right, who's providing regulatory services, right? You will hire the person for some time, right, and then you will get those regulatory stuff done, right, getting those approvals, those processes, because you don't know them. And if you start doing everything yourself, you spend so much time there, you lose the focus, right? So it's always better to pick up the professionals, right? Maybe for small time, build your network, right? Do some friendships, right? Leverage those friendships, and take it forward from there, right? Then the comes, how do we manufacture? I do not have anything, right? I do not have a room to manufacture. How do I manufacture a drug which requires at least 10,000 square feet of area? Then what do? I'll sign a licensing deal with, let's say, a large pharma company known as AstraZeneca. I tried to identify, let's say, who is the MD of their manufacturing unit in India. I connected on LinkedIn, right? I again tried to connect with him. ठीक है, let's do a meeting, right? So I have a good idea, right? I can help you, right? So you need to provide the value to your partner, right? So you will do that meeting, right? And then you will say, okay, that I have this drug, right? This will have this much of target addressable market, right? And this is the serviceable addressable market, right? This will help your organization to do this much of business if you help me manufacture this, right? So let's sign a licensing deal. If I sign a licensing deal, you will be manufacturing on my behalf, and you will pay me this much of royalty fee. So licensing may, you know better than me, right? So there is a loyalty fee. So this is how it starts, right? And then you start getting the revenues, and then you keep on getting more and more revenues, and then the story moves on, right? From a fundraising perspective, right? To answer your specific question, for a startup we don't need a team. There are various advisors, right, who help startups to do their all that stuff, right? So there are a lot of people who work on this thing: business modeling, business planning, financial modeling, identifying investors, right, negotiating with the investors, right? So the way I was trying to convey was that we'll need to raise the funding again and again. It is not a one-time job. If we raise funding and we are done, no. Typically speaking, every year we need to raise funding, and it is very critical to define your milestones to raise a fund, right? So for example, let's say for a clinical trial I need, let's say, 2 crore rupees. So I'll pitch an investor that, okay, this funding will be used to do the clinical trials, and if we become successful, then in the next funding round you will get preference to invest, so we will be at a higher valuation. So if our clinical trial will succeed, where the probability is, let's say, 70%, you are able to showcase, then he will know, okay, 70% case mein valuation will go up, and I will have a preference to invest at a higher valuation as well, right? That's how it typically works. Very interesting questions, man. This is what I really want, right, in the sessions. That, yes, please.
But the startup person who's just starting up, he doesn't have fund to provide those advisors.
To
That advisor, you need advisor for fundraising. मतलब
उनकी फीस
उनकी
कैसे
फीस
देंगे?
कैसे देंगे?
ही नहीं, शी बोलो ना, है ना?
you are
अपने
the
लिए पूछो.
you are the entrepreneur, right? You can be. Why no? You say yes.
Say, but say
Say
it for yourself. Ask
say
the
yes.
question for yourself.
Say yes. राइट, हैव करेज. कोई बात, फेल हो गए क्या होगा, नहीं हो गए फेल, डरेंगे तो हो ही जाएंगे, डरने से क्या होगा, राइट? इफ यू फियर फ्रॉम द फेलियर यू कैन नॉट प्ले, राइट? फियर इज द बिगेस्ट एनिमी, राइट?
डर के आगे जी.
डर के आगे जीत तो मानना ही पड़ेगा, राइट? इन एनी career, right? It's not only about startups. If you keep on fearing, you cannot play the game. And if you do not have the money, that's fine. It's very understandable thing, right? For any business, whenever we are doing, you do not have money. That's the biggest problem, right? But slowly and slowly, right? You will try.
You just have her question, if I understand, tell me if I'm correct, कि एक स्टार्टअप शुरू किया एक एंटरप्रेन्योर ने, और आपने बोला कि उसके लिए लोग हैं, स्ट्रैटेजिस्ट के पास चले जाओ, बिजनेस
We do not have money to pay to the advisor, right?
फीस कैसे देंगे?
I understand that, ma'am. Not a question. So thing is that when we, okay, I get it, right? So typically speaking, when we do consulting with startups, right? So there are various models on which we work, right? So typically speaking, your fee before fundraising is very low, right? So let's say you hired me, right, as a advisor. So what I will do is, okay, that for entire business modeling, business planning, right, financial modeling and stuff, I'll charge you very less, okay, but you give me 5% equity in your business. Simple. Or let's say if you
Every
are
fund that is
if you are gonna raise 5 crores,
हो जाएगा
yeah, if you
you will
raise
get some share
if you
पर
raise
he has already told you अपनी equity इतनी शुरू में देनी नहीं है
right. So second model is, okay, you are raising 5 crore rupees, okay, you hired me as an advisor, right, and what I'll say is, okay, I'll take 5% commission.
इतने पैसे रेज करने के लिए उसमें से उस वक्त फीस
When you get the money, out of that 5% I'll keep as my fee. So you don't need to pay upfront, but you need to sign a legal document that, okay, once you get money from the investors, this much will go to the advisors. I hope this answers your question.
which you can in your expenses you can show that you have to pay to this person also
So this is known as professional
startup के
fees.
साथ जुड़ जाएगा
Professional fees, right? So this is how it works, right? Are we clear? Ma'am, are we done with the time? I just started actually.
maybe maybe you can
Okay.
take us I think 15 मिनट और बैठेंगे 5 मिनट
Are we good? Are we tired? No? ठीक है, good.
because this is something we really need मुझे ऐसे लगता है
Okay, let's talk something interesting, right? I'll not talk about valuation. I'll talk about how do we really increase our valuation, right? That multiplier we discussed, right? How do we really increase that multiplier? So we always talk about carve out a niche for yourself, right? Carve out a niche. But very critical factor which we as advisors or investors look at is your niche scalable? Can you scale it up across a large set of target population? So for example, TrueMeds. I'm taking examples from pharma industry. I'm not from pharma purely, but taking relevant examples so that you can relate to, right? So TrueMeds was an organization. I'm taking all Indian examples so that we don't think that we can do business in US only.
he
We
has
can,
pharma clients so
right? So we can do business in India. So have that passion, right? So TrueMeds was founded in 2019, right? And they could imagine they could reach 400 million valuation within 6 years, which is very good, right? And the reason is what they really did is they started teleconsultation, right? And they focused on a niche known as generic medicines. What did they focus on? Affordability of the medicines. And second thing, in tier 2 and tier 3 cities, there is a huge problem, right? So there are various chronic diseases like diabetes, like heart ailments, right, cancer, so many other problems, right, wherein the medicines are very costly, right, and people typically cannot afford. And those medicines are like you have to take them every time. Let's say blood pressure ka medicine hai, you have to take it. Sugar ka medicine hai, you have to take it, right? So they focused on ensuring that how do we make it more affordable for them and also scale it up. How do they scale it up? They enabled it through e-pharmacy, right? So they could showcase a scalable business model in tier 2 and tier 3 cities. Okay, so this is how they raised the funding, right? So in the seed funding, you see every year they have almost raised the funding, right? It's not a one-time job. In the beginning, they raised very small amount, 0.7, 0.8 million, right? The second year, they raised 5 million. The next year, they raised 22 million. What if they said that I need 20 million the first year? Nobody will give. As simple as that, right? If you ask for 20 million in the first year, nobody will give. So ask the right amount and divide the fundraising into specific milestones, right? That for this fundraising it's for this milestone, the next fundraising round will be for the next milestone, things like that. Second is network effect, very important, right? So ma'am discussed about Zomato, right? It is a network effect. Network effect means if the number of restaurants who are providing service through Zomato increase, the number of customers who buy from Zomato will increase. If the number of customers who buy from Zomato increase, the number of restaurants who are serving through Zomato will also increase. Same business model with Uber, same business model with Ola, all these are platform businesses, and the driver is the network effect. And in this case, typically speaking, and what Subiragil ma'am were talking about is users first, profits later. All these business models work on building that user base, right? Most of them are non-profitable. You know Urban Company? When was it launched? 2014. It's been 11 years now, and it is still not profitable. But its valuation, it's a unicorn. It's a unicorn, despite the fact it's EBITDA negative. So the entrepreneurs, the founders are looking not at the profits, they are looking at the valuation to become rich, right? So talking about 1mg, right? So 1mg within 10 years, right? Within few years, right? I think 7 years. They started in 2015 and they became a unicorn in 2022, right? Now it is like 10 years when they were founded, but within 7 years they became a unicorn, right? What did they do different? They used this platform business, right? I think every one of us know 1mg, right? I don't need to talk about it, but this is how you invent, right? This is how you drive the valuations. There is predictability of revenue, right? So again, this is the same niche. Imagine if this, imagine there is an organization, right, which is your TrueMeds, which is already there, and there is an organization known as Generic Aadhaar. He was an entrepreneur. He founded the company at the age of 16, and what he did, he decided, okay, I'll sell generics. So you see TrueMeds was also generics, right? It was founded in 2019. Both of them are highly successful, but their model is a bit different, slightly different. They are focusing on the digital channel. This guy Arun Deshpande is focusing on the physical channel, right? So his hypothesis was that if you want to scale up in tier 2 and tier 3 cities, the offline channel works better, because people are not digital savvy. In TrueMeds, you need to upload your prescription, right? Then there will be a doctor who will do teleconsultation with you. He will tell you the generic medicines, right? And then you will buy them. He said, no, nothing doing. I will launch your, I'll partner with your local chemist, right? And I'll launch this model in a brick and mortar model, right? Your franchisee model, wherein people will be buying franchisee from me, and I'll get royalty fee in franchisee. I hope everyone understands. Like McDonald's, right? It is franchisee model. You don't need to invest into your infrastructure. People will buy your franchisee. You will get recurring royalty fee. So that's why predictability of revenue, right? If you are into a franchisee model like Patanjali's of the world, like this guy, right? So your revenue becomes much more predictable, right? Every year you know that this much of royalty fee is going to come, and then specific percentage of commission is also there, right? So this is known as predictability of revenue. If your revenues are predictable, your multiplier will be higher. Yeah.
How valuation is differentiate between profit? Is valuation is more better than profit, or profit is more better than valuation? How they link them? Valuation and profit.
Valuation and profit better कैसे निकालोगे?
Which one is better in startups? Valuation or profit?
मतलब रेवेन्यू
How
की
they
बात
link?
करनी चाहिए कि वैल्यूएशन की बात करनी चाहिए?
See,
I think it related.
they are related, right? So let's say if you are a pre-revenue company, right? But your idea is such that it is gonna revolutionize a thing. I'll talk about a company, a US based company. They launched some machine learning kind of an algorithm which is collecting data, integrating data, right? And they are enabling the drug discovery, right? And they then partnered with a couple of organizations including AstraZeneca and stuff, right? They could do wonders, right, in a very small period of time. So I would say it's more about how your idea will grow, right? What is the predictability of the revenue? So once you have an idea where the probability of success is very high, right, your valuation will automatically go up. correct. So there are various kinds of models, right. So for example, if we talk about the last model, right, which was more on e-pharmacy, right, or 1mg, right, here the focus remains on acquiring more and more customers. They do a lot of marketing. Have you ever seen income statement of urban company 1mg? Anyone? No. Look at the marketing expenses they are doing. They spend huge on marketing 1mgs so that they can acquire customers, and the typical metric we use is how much they spend to acquire one customer, right. What is the spending? So these are very critical metrics we'll look at when okay, then you are saying that okay, I'm pre-revenue, right, I'm not earning a profit, but I'll look at those metrics, right. What is your customer acquisition cost, right, and what would be the ticket size of each customer? How many customers are you expecting? What if the different scenario comes up? So in modeling we do a lot of scenario analysis, right, base case, optimistic case, pessimistic case, right. We triangulate the numbers. It's not that something we give and other will believe it. It doesn't work like that. So there is a lot of triangulation which happens, right, a lot of number crunching, and people are so smart that at the back of the envelope they can get to know कि इसमें गड़बड़ है या नहीं है. At the back of the envelope I'm telling you, you tell me a number, to some extent I can tell you this makes sense or not, right. With that experience you get to know कि इसमें there is some issue in the assumption, something is not clear, right, because that's our job. So we help investors, right, also to check whether this asset will make sense or not, whether this will fly or not, right. I hope I answered your question. For a entrepreneur, more critical is your valuation, because profit pharma में इतनी जल्दी नहीं आएगा, right. Most of the models in pharma are very difficult to reach a profit stage. That's why I started with the J curve, right. In pharma it's more about how much disruptions you can bring, how much social impact you can bring. Can you discover, let's say in cancer we are dependent on chemotherapy in this stream of medicine. We are dependent on chemotherapy and it is quite costly, right. But if we can identify one medicine, right, which can be an oral medicine which can help us not to undergo chemotherapy, what will be the value of that drug? It will do wonders. You don't need any revenue. You just bring out the idea with a success rate of 70%, right. You will get any funding you want, any funding I'll say, because the impact is so huge, right. The cancer rate is increasing like anything. It's predicted like in India the rate of cancer is going to increase, right. It has become very common these days, right. So if the impact is very high, right, their revenues and EBITDAs and cash flows doesn't matter. Okay, हाँ जी मैम.
If we raise the funds every year, then that means our valuation is also increasing.
That typically means, but it is not a guarantee. I'll talk about an example where valuation decreased by 90%, right. So you need to do the right things. That's why Suvira ma'am was also telling it's not a one-time job, it's a continuous process, right. And raising funding is also not very easy, right. So you raised fund, uske baad you will have a governance set up with the investors, right. It's not that they are saying ki, okay, you take money, I'll meet 1 year later. It's not gonna happen like that. Every month there will be a governance cadence. Okay, what is your business plan? What have you achieved? Why is there a lag? What is the backup plan? So on and so forth, right. How are you managing this cost? How are you managing that cost? Where are we in the discovery? What are the partnerships we are doing? So a lot of governance happens around it, and we typically, so it's my role as well in my organization, we set up that governance, right, for the acquired entities. So once we acquire an entity, so my role currently is how do I ensure the acquired entity and the organization which is acquiring it drive value together, right. How do they do business together? How do we drive that value? It's not from a valuation standpoint, because we don't intend to sell that business, but how do we enhance the business between the two companies, right. How do we do the business together, go to market strategy, value propositions, new solutions, new customers, new logos? How do we do that? There is time to market, right. How can we launch some of the products very quickly? So this is not a startup, right? Sun Pharma, we everyone know, is a very large organization, right? But time to market is very critical. They could launch a drug during COVID-19 period, right? When it was the necessity, right? So and you know, during the COVID period, I think it was pharma industry which spiked like anything. The valuations of pharma companies spiked like anything, right? And these were the reasons, right? They could juggle around, right? They could do the right partnerships, right? And they could find out a solution, right? Regulatory clarity, right? If your organization is able to get the right regulatory approvals, uh, the path becomes very easy, right? So Molbio was an organization. Again, it got traction around the pandemic period. So you see, it was founded in 2000, so way back, 25 years old organization, not doing very great. It raised first round of funding in 2020, right? $10 million, but so it was again at the time of pandemic, right? So what they did unique was they enabled decentralized diagnostics, right? Which were like portable and real-time platforms wherein they can diagnose more than 40 diseases. And during the COVID time, they could enable, right, testing the COVID, right? So there was used to be a van. They used to take that van and do the testing, right, in the remote areas as well. And you see the results, right? So it's always about the impact which you can derive and the necessity of that impact, right? During COVID-19 period, I think government was very uh, was very friendly with the organizations, right, to give the regulatory approvals in a very quick fashion. Otherwise, I think these regulatory approvals take a lot of time. Then is your platform thinking. I think this was the organization which I was talking about. This is a US based organization founded in just 2018, right? And you see the valuation, 2.57 billion dollars. How many years? 3 years. 3 years, 2.75 billion dollars valuation. That's the power of business model. So what they did, they integrated your machine learning with your some biological data, right, and clinical data and human data, blah blah blah, and they could accelerate the drug discovery for others, right? So who are their customers? Large pharma companies who are doing drug discovery, right? But they could enable it for a lot of customers, right? And they did a partnership with, I think, AstraZeneca, with Eli Lilly and BMS, right? And they could really drive their valuations up. Uh, Last but not the least, strategic partnerships are very critical, right? And we discussed it a lot, I think, right? So in every step, it's not that in the beginning only that you need to do the partnerships. Your partnerships is a bread and butter in business, right? For everything, for anything, partnership is very critical. At every point of time, you need to think twice whether you should build it in house, or you should partner, or you should buy, right? So this organization, this is not a government organization. The name looks like that. It's not an institution, Serum Institute of India, but it is a private organization looking for profits. It's not a non-profit organization. It did a licensing agreement with AstraZeneca, right, to manufacture and distribute its COVID-19 vaccine. We typically call it as Covishield, right? So this way they could secure 400 million grant as well, right? So this is how the partnerships work, right? So this is very important, right? So how can we really preserve the valuations, right? This is very critical. Increasing the valuation is one story, right? But how do we really sustain it, right? Because it is not easy, right? And believe me, you cannot bluff for long. You cannot play a bluff for long. If you got a good valuation without the right fundamentals, it will not stay very long. Taking example of PharmEasy, right? PharmEasy, again, it was a platform business, right? And you know, it could increase its valuation to $5.6 billion in 2021. It was a unicorn, right? And it was doing the same stuff which others are doing, right? 1mgs of the world and others, right? So it was a very successful organization earlier, but its fundamentals were a bit lacking, right? Reasons: their operations were not very efficient, their margins were low. They acquired an organization with the name, uh, they made an acquisition known as Thyrocare to get into the diagnostics business as well, and they acquired it at a very high valuation, around 600 million, right? And they took debt funding to acquire that organization, right? See the level of risk. They took huge risk, took debt funding. We call it as LBO, leveraged buyouts. Leveraged buyouts means you do not put equity, you take out debt, right? And you acquire assets, right? But the two organizations couldn't do well together, right? It wanted to cover entire aspect of pharmaceuticals, right? Including your medicines and including your diagnostics as well, to do end-to-end services. The rationale was not wrong, right? But it is very critical to assess your assets, right, before acquisition, right? Very, very carefully. Check the cultural compatibility, right? Check their business model, right? Check the level of risk you are taking, the business risk you are taking, the financial risk you are taking, right? Before making any acquisition, right? Then is their reliance on medicine delivery was a primary thing, right? And this made their revenues fragile, right? It was a price sensitive kind of a revenue stream and relatively lower margin business, right? And last but not the least, they decided to do an IPO, right, at a wrong time, and they couldn't do the IPO because it got delayed. Their performance dwindled. The IPO got delayed by 1.5 years, and then they did it, and then they fell. The last valuation was around $450 million. It fell almost by 90% within 2 years, right? So that's why it's very critical that we need to sustain our valuations by staying honest, by staying true to our business, right? Making sure our fundamentals are in place, making sure that we know the basics, right? And we stick to the ground, right? We don't think that, okay, I'm a unicorn, I can sleep well. No, it's always the sleepless nights if you want to be rich. Right? So it's gonna be sleepless nights, right? But if you can manage the things well, right, you can enjoy. It's not that it's always sleepless nights. If you are a good program manager, as I said in the beginning, right, it's not only during a startup phase, but even when you are a mature organization, you can sleep well, you can live well, and you can run the organization very well as well. That's it from my side. If you have any questions, gentlemen, feel free to ask.
Any quick questions? Anything you have in mind? So Agam is not very old than you, maybe just 12 साल का फर्क होगा. So like if you have any things, and he said he can, you know, do it for any generation. So I'm sure he can answer your questions better than other people like us.
Anyone? No? Okay. I think we are good. It was great to come here and speak in front of you guys. Very, very well innovative kind of a, I think, group who is looking forward to launch their startups. So really happy to be here, and a big thanks to Indu ma'am.
So in fact, for the last 3 days, they've been interacting with one faculty who was our foreign faculty. He left just before your and Dr. Sumita Gill's session, and he's been training them during their tutorials on like each. He divided them into groups.
Okay.
And each group has an idea, and they've been working on it and things like that.
Correct.
पैसे तो चाहिए ही होंगे, है ना? वहाँ यहीं पे क्वेश्चन आने हैं ये वाले जो अभी बताए हैं सब.
So having that basic acumen is very important. I think we got some idea about the journey, right? It's a long journey, but somewhere we need to start. We should start from somewhere. We should be bold enough, right? डरना नहीं है.
अभी तो हौसले में थे, अभी डर लगना शुरू हो गया इन सबको, है ना? मुझे भी।
No, ma'am, I would say so today, right? And I started the session with that, right? So, 20 years back, right? Doing business was very tough, right? And we used to call it as barriers to entry. In strategy, in management, the first topic which we used to learn was barriers to entry for any business. And in that time, right, the way to succeed in a business was to create barriers for entry for other players, the Tatas of the world, the Birlas of the world, the Ambanis of the world, right? There is the three businessmen were there in India, right? But in today's world, if you see, right, how many startups we have, how many businesses we have, right? The environment has totally changed, and I think the investor community, the grant giving community, right, is doing great job in enabling, right, the common people like us, right, to live their dreams, right. So I think this is very right time if you're thinking to become an entrepreneur, right, and we will have to start from somewhere, right. It will always be resource constraint, it will always be that what if I fail, right, that what if ever comes, right, but you need to take that risk, you need to start from somewhere, right, and then you learn during the way. There is nobody who knew everything in the first step. Did we know how to walk when we started walking? No. We tried multiple times and
तब
we
मम्मी
learned.
पापा थे ना पकड़ने के लिए, अभी ये मुश्किल इनफैक्ट
You are there now, ma'am. We are there.
वी आर देयर यार टू हैंड होल्डिंग के लिए। नहीं, मैं अभी सोच रही थी कि शायद इंजीनियरिंग एंड उसमें यूजुअली सेवरल ऑफ देम एंड अप बीइंग स्टार्टअप्स। फार्मा में थोड़ा मुश्किल हो जाता है, एक तो शायद हम